All right, everybody, we're about to get started here. Just another 30 seconds or so. All right, let's do it. Time for the weekly prop trader market update. Today is 4/20, April 20th. Time is it here? 12 o'clock Eastern time. So excited to update you guys on the market. There's been some strange happenings afoot these last couple of days. I am an associated member of T3 Trading Group, an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure at this time, I am 100% long. We are still technically in a bull market in the S&P and the NASDAQ, though again, there are some strange happenings afoot here with some major relative weakness in certain stocks, which is what one of the things I'm going to be chatting about today. About me, I think I've been doing these webinars for over a year now or so. So basically been traveling around the country this entire year. It's been awesome, and I'm in Idaho. I do think I'm going to be heading back to New York pretty soon, though. I think my incredible trip here might finally be coming to an end in June. But I've been with T3 and I've been going to their Manhattan office regularly on a day-to-day basis since 2010 until coronavirus hit. So I'll probably be going back to the office pretty soon. I've mentored well over 100 professional traders at the company. I'm currently managing a group in excess of 50. In my spare time, I'm big into skiing. I'm big into martial arts. I caught closing day at Big Sky, Montana on Sunday. It was awesome, so much fun. Also, a little bit sad to see that ski season is coming to an end. But when I'm back in New York, I can hit that indoor ski spot that they have in New Jersey. I'll probably be going there once in a while. It's going to be a big difference to go from 3,000 feet of vertical to 160 feet of vertical. But you gotta pursue the things that you're passionate about, right? And I'm going to be looking forward to getting back in more involved in martial arts when I'm back in New York as well. So today I'm going to be talking about the current state of the market, trading, T3, accounts at T3. If any of you are interested in any of the topics I'm discussing today, here is my email address. Do not hesitate to reach out. And let's go to the charts. All right. So here's a little 5-minute chart of the SPYs from today and yesterday. We can see some weakness in the SPYs today. Currently, the S&P is down 0.9%, the NASDAQ is down 1%, and the IWM is down 2.25%. So maybe we saw a little bit of a bottoming signal on our 5-minute chart here at 11:35, right before the meeting. Usually, I would want this type of candle here, if it's going to represent some sort of bottoming candle or retracement candle, to be on higher confirming volume and to have more extension on that time frame. But if we look at a 15-minute chart, the 15 has a little bit of higher volume, still not ideal, but also has the extension on the 15-minute chart that I do like to see if some sort of real retracement or reversal would come in. And at 12 o'clock Eastern time, the 15-minute chart does become more important than the 5-minute chart. Usually, in the very beginning of the day, that first half hour, that's when I'm really looking at 5-minute charts. 5-minute chart's probably the most important time frame from an execution perspective. And then starting somewhere between 10:30 and 11, that usually starts to switch over to the 15 unless there's real news, real volume and volatility that's actually hitting the market. But let's take a look at our daily charts here. Starting with the SPY, again, basically the S&P 500 here is what we're looking at. Well, what can you see when you look at the S&P 500? Very clearly we are in a bull market, a massive bull market. Look at this month here of April, even starting at the end of March. I think that this might be a record, like tied for the record or possibly the record of most amount of green daily candles in a row for the S&P, where we closed above where we opened. I think it was like 15 days in a row, and then finally we had one little baby red candle followed by continuation. And then this week, so first of all, one of the things that we're constantly doing as part of my professional team is we are viewing money flow and sentiment, and we saw gamma dropped off to start this week. So basically when gamma drops off, that means that we can expect volatility to increase. So seeing Monday, Tuesday this week actually having our first price correction in a month basically is no surprise at all. I was discussing with my team even into the end of last week when we were still rallying hard that this market desperately needs to reset up. How would the market reset up? Through a time or price correction. A time correction is basically when the market goes sideways. An example of a time correction is a bull flag. A price correction is when the market moves down. So just as a review here for people who follow the weekly webinar, I view the space between the 8 and 21 EMA as the space that I consider to be the technical equilibrium for the marketplace. So when I see that a stock or a market is a bit above that 8 EMA, I consider that stock to be extended. When you're looking at an extended stock or an extended market, I don't want to buy it because I'm going to have a lower probability of success given that degree of extension. I also don't necessarily want to short it because the thing about momentum, that's an important term in trading, momentum. The thing about momentum is that it can last for a long period of time. So you might be looking at a market and saying, hey, this thing's extended. Next thing you know, it's continuing to go and go and go and go. I mean, you can look at this entire rally. Beginning of April, the second day was massive. We had 2 days of rest. So basically, this is a mini bull flag. I actually would have liked 3 days here. But this little mini bull flag allows that ADMA to catch up a little bit more. It didn't fully catch up, and then we got continuation. Then we got extended again, right? And we rested a little bit, but we kind of grinded higher and flagged kind of again, a little bit of a correction here. And then we extended again. And now we're finally experiencing a price correction where we've pulled down for 2 days in a row in what is otherwise a very bullish market. I was talking to my team in the morning meeting today that the area really between 412 and 410 is the space where I want to start considering to buy again. I understand that this market could pull all the way back to 406, 407 and actually still be healthy and bullish, but this would be enough of a correction to some previous support here into the ADMA that's where I would want to consider starting to buy. So it's not a coincidence here that through 411 we got this little bit of a hammer doji on the 5-minute chart and on the 15-minute chart on this time frame, and we'll see what type of upside continuation can come from this. Now, the really interesting thing to me about this market is that there's a bit of an anomaly that I'm seeing between the S&P, the NASDAQ, and then just the average stock that I happen to look at and happen to type up. So you can see here, again, SPY is basically incredibly strong with a little 2-day price correction. The Qs here also have been incredibly strong for the month of April. We saw Apple lead us higher. We saw Microsoft lead us higher, basically all of the FANG names. And then you look at the IWM, and the IWM just did not participate in this rally at all. The IWM, the Russell 2000, which represents a lot of mid caps and small caps, basically stayed really neutral for this month and actually broke down a little bit today. And again, the really interesting thing to me is that we can just type up a whole ton of stocks, particularly it's the names that I was saying at the end of last year and the beginning of this year are in mini bubbles, are names that are just sitting on lows that have had incredible pullbacks. So you can look at a Jumai, right? Basically any of these high multiple speculative names. Jumai pulled back from 70 to 28 and is sitting at lows and looks horrible. If Jumai was the entire market, you would think, oh my gosh, the market's in a bear trend, right? We're in a bear market right now. Oh my gosh, look at this stock. It's pulled back, 60, 70%. And there's so many names like that. Plug. This Plug caught a big upgrade this morning and it can hardly catch a bid. Went from $75 down to $25. Look at Fuel Cell, another one. Again, you could make the argument that maybe none of these stocks deserve to do the degree of this move in November, and they're just coming back to where they, air quotes, belong. But oh wow, if you're just looking at this, you would think we are in the depth of a bear market, pulling back here from almost $30 down to $8.80. Look at NEO, right? NEO pulling back from $65. This is a company that I like, down to trying to form some support here at $34, and it's been trying to bounce off that the last couple of days. Look at Open, right? This was a big name here. People are talking about how it's going to revolutionize real estate buying. This thing pulled back from almost $40 here in February to $16.50. Look at Beefly, a big Cathie Wood name. This thing also has just pulled back from $29 to $13. And look at these last 4 trading sessions. This thing broke support at $16 4 trading sessions ago and has just been absolute and utter destruction, going down from $16.70 to below $13 in only 4 trading sessions. Just so many names out there right now that you can look at that basically just look just like this, where the charts are just, it's absolute and utter destruction. It looks like you're in a complete and utter bear market when you look at most of these names, and then type up SPYs again, type up the S&P. And that's kind of a unique situation here. And obviously, the FANG stocks, Apple, Google, Microsoft, Facebook, Amazon, those names are such a large percentage of the market that all it takes is for them to be strong and basically everything else can be weak and your S&P is going to hold up. But just seeing these deviances is incredible to me. And I honestly don't know if I've ever seen this in my entire trading career to this degree. You can also look at the XLE, which is now being really weak after being strong since November, is breaking down today. You can look at XLF, which is having a really weak day today. That one is much nearer to high as your financials. So this is one of the kind of anomalies that I'm dealing with my team right now. I think that the most bullish thing that could occur would be money rotation, which means that the SPYs pull in just like they have or go sideways. The Qs pull in just like they have over the last day or two and or go sideways. And then you actually see the IWM then start to catch a bid. So that would be money rotation. But that's not what we're seeing. It seems like today and yesterday we're seeing a decline in everything. The names that were weak got even weaker. And again, you look at some of these names and it looks like you're in a complete and utter bear market. I look at certain stocks and I'm like, oh my God, we're in this bear market. I should be looking for capitulation buy setups. A name again like this Beefly. I should be looking for a capitulation buy setup. Things gone from $29 to $13, and just in 4 trading sessions went from $17 to $13. I should be paying attention to this again to see if some sort of downside extension, high volume hammer can come in that could be a capitulation buy setup. But then I look at the SPYs and I get scared. Well, if this is what names like Beefly and Plug and Fuel Cell and Neo and Jumai and all of this, there's just so many of them. If this is what these names are doing now, when the market's just pulled back a hair away from its all-time highs, what are those stocks going to do if the market actually had a reversal and actually pulled back? What are those stocks going to look like if the SPYs went down to 390 or 400? I'm not saying that's going to happen. I feel like that's low probability because just the technical bull trend that we're in is likely to continue. That's just how technical probability works. So I'm not going to say that is going to happen, but in a lower probability scenario where it did happen, and the SPYs break down to 390 or 400 or something like that, and really kind of reverse here, and this whole month of April just turns to be a big breakout failure in the S&P. Again, what does that mean for these names that are sitting at their lows that are already down 50, 60, 70%? And I don't know the answer to that. And that's where I'm personally struggling a little bit with the market. And honestly, it sounds like a lot of people that I'm speaking with are struggling with the same situation. The SPY is telling you want to be long, right? It really is. So what I'm sticking with for the time being, the SPYs tell me I want to be long, the Qs are telling me I want to be long, the IWM is giving me more of a neutral signal. I want to err to the side of the longs. And maybe I can begin to see some capitulation in some of these stocks. Look at Coursera. This is one that I have a position in this. I love the company. IPO, I did really well on this thing. I got out of my long at 60. I started to rebuild back into this position around 50 just because I really like the company. I thought that this was a pretty good pullback of the initial move. And look at these last 3 days of destruction, absolute destruction. Look at Roblex. Roblex, we caught this move. Josh in the VTF was talking about on this day that he thought the chart was looking really bullish. I agreed with him. I like what the daily chart looks like, so I was able to get involved further on this day, created this beautiful bullish pattern in here, and failed. Look at this failure. Going from 78 and change to a low today of 67 and change in 2 trading sessions off that failed pattern. Again, absolute and utter destruction. So the big picture here of the market is telling me stick with my game plan, stick with my rules. It's also still telling me a little bit less is more until I get a better signal from this market. What I told my team today, coming into today's morning meeting, was, hey, we're set the gap down. We're almost at the area, based on today's open, where I want to start doing some buying. We actually got into the area today during the actual session. That's spaced between 412 and 410, like I already mentioned. But I just still want to be patient because I'm not seeing relative strength anywhere today. I'm just seeing some things that are weaker than other things. So let's see how we close today on the second down day. Let's see if we can get some sort of tail. Let's see what our closing price is, or if we do close more near lows, which could be a sign of a little bit further of a correction. And we also want to continue to pay attention to some of these high multiple names where, again, you just type up those high multiple names and it looks like we are in the depths of a bear market. Yet it's as the S&P is a hair away from all-time highs. So it's a little bit of an anomaly there. And just to emphasize what I emphasize to my team every day, risk management is the key to the business. So you take your trades, you take your positions, you have your rules, you follow those rules, and you get out of those positions. Just because Kathy at ARK might be holding some dogs right now, she has a different time horizon potentially than you, definitely a different balance sheet than you or I do, and she might be able to absorb those types of losses, but you or I, we might not be able to. So we don't want to be bag holders in some of these stocks that are getting absolutely destroyed. So you have your stop losses in. It's always fine to exit a position, and then you can potentially look to re-enter it when it gives you a more appropriate signal that now might actually be the right time. So that's pretty much all I've got. I see a question here in the YouTube, someone asking me about HOG, Harley Davidson. First thing I would tell you about HOG is if I could stay in Idaho for the rest of the summer, I would probably go buy one. I used to have a motorcycle in New York City. I used to actually commute to T3's office on my motorcycle every day. I loved it, but I was in like 7 accidents. Owning a motorcycle and driving it in New York City every day is not a good idea for your health. I was a younger, probably more foolish guy back then. I got rear-ended by taxi cabs on like 5 different occasions. But if I could stay out here in Idaho, I'd be buying a Harley Davidson right now. And their earnings report yesterday looked excellent. They totally crushed their earnings. The guidance from what I saw looked excellent. And the chart looks great. $43 here was a huge level for this thing. It gapped well above it, so technically that's a breakaway gap. It tried to go a bit yesterday, but it was so extended and the market was a little bit weak that it couldn't. And then today, even in market weakness, this thing is showing incredible relative strength, basically flagging here. And this is on a day when almost any stock that you look at is probably negative, including the SPYs are down a lot, Qs are down a lot, IWM is destroyed, and Harley Davidson here looks great. The only thing I would say about this thing is it is a little bit extended. So if you already own some, might not be a bad idea to trim and trail, take a little bit of profit, but also hold some. You need this ADMA, so it's extended, right? How do I know it's extended? Stock's currently trading at 46.65, and the ADMA is at 42.50. So I would say that this stock is extended from its ADMA, extended from its upper band of equilibrium by about $4. But overall, this chart looks fantastic. The earnings look great. As long as it continues to hold above $43 as this ADMA catches up, it looks fantastic, and definitely a stock that you want to be long. And hopefully I'll be able to buy myself a Harley soon. So that is the answer to your question. I'm always happy to answer questions, by the way, when I'm doing these weekly webinars. I do pay attention to the YouTube stream here, so if you put in any questions you have in real time while I'm reviewing the charts, I'm happy to answer them. All right, so with that said, let's talk a little bit about T3 Trading Group. So I think a lot of people that I speak with, they're familiar with T3 Live almost more so than they're familiar with T3 Trading Group. T3 Live and T3 Trading Group are two separate but affiliated companies. T3 Live is basically an education and media company, whereas T3 Trading Group is an SEC FINRA registered broker-dealer. We engage in professional proprietary trading accounts, and we engage in retail trading accounts. Our retail trading accounts are really for the active trader. It's someone who is trading actively and is looking for direct market access on a professional system. Then I think that our retail accounts, if that fits your profile, are possibly the best that are out there. So if anybody has an interest in a retail account and they don't want to go through, for example, the licensing that's required to become a professional trader, definitely reach out to me and I can provide more information on that. We have 4 physical trading offices now in New York, though everyone's been remote for over a year, utilizing the virtual trading floor, specifically the Pro Desk, which is the virtual trading floor that I run. Honestly, things have gone really well on a remote basis. I've been able to build out all of my training classes and do my meetings and everything in the same way as if when the office was open, just on a remote basis, and it's worked out really well. As I mentioned, because T3 is a registered SEC broker-dealer and member of FINRA, it does mean that all of our professional traders have to become licensed. There are 2 examinations that you need to pass in order to work with us. The first is the SIE exam, Security Industry Essentials, and the second is the Series 57 examination. We'll sponsor you for the exams. We can provide study materials. Once the exams are passed is when we can get started with actually trading. We have 3 different trading softwares. We actually onboarded a 4th now. So we have Lightspeed, Sterling Trader Pro, Wolverine, and we also have Realtik. The relabeled Realtik is Easy E. Personally, I've been using Lightspeed for over a decade. I love the software. Sterling Trader Pro is made by the same company, also an excellent software. Sterling Trader Pro is the software that we use for our retail accounts at this time. As far as asset classes go, we have equities, we have equity options, we have futures, including Bitcoin futures, we have options on futures. So personally, my focus is on the equity side of things, but if any of this interests you, please reach out. So some members of my team do also trade equity options. I personally don't, and I'll tell you why. I've always been primarily a directional trader, meaning I think that the stock's going to go up, so I buy it. The number one reason that most people I speak with in a retail account, why they trade options, is because of the natural leverage that's inherent in the options product. You get more bang for your buck. It's higher risk, higher reward. Well, as a professional trader with T3, focused on equities, T3 basically gives me as much capital as I could ever need. We typically start by providing traders 20 times their account in buying power for equity day trading and 8 times their account in buying power for overnight positions. So my thought process has always been, well, why do I want to trade options, which are a less liquid product and subject to time decay, just for capital access, when I already have as much capital access as I could ever want? With that said, I do have option traders on my team. They are primarily focused on spread trading or calendars or some sort of strategy that is possible to implement in options but is not possible to implement in straight equities, or because they implement a lot of swing trading and they're looking to sell covered calls, as an example, for hedging and cash flow purposes. For new traders, if you're just getting started in the industry, well, T3 is a great place to start because we really focus on training and development of the people who are joining the company. So I have a 1-month training program that consists of a series of lectures that you get access to, the daily morning and afternoon meeting. Every afternoon meeting I do ends in a Q&A. That's a great time as a new trader to ask questions about a trade that you took or game planning or basically anything else. So, this is a great spot to be able to get the things that you need to properly develop as a trader. But even if you're experienced as a trader, my team is also great. We have a lot of experienced people on the team. Some of the folks on the team are former hedge fund managers, former floor and pit traders, people who have been in the business for 20 years. And it's a great support structure that we have here. So you might not need answers to the beginner questions anymore, but you still want to speak with other like-minded individuals on a day-to-day basis and share information and share research ideas. We have a fantastic community. And also our size. If you're an experienced trader and you want to put a couple $1 million into an account because you want access to 40 or 50 million, we can make that happen. Just reach out to me. Once the exams are passed, you are required to commit a capital contribution to fund your account. And then, as I mentioned earlier, what we typically start by doing is allocating capital access at 20x and 8x. So, for example, if someone put $50,000 into a professional account, I basically would most likely start by allocating you $1 million to work with from a day trading perspective and $400,000 for overnight positions. And then you'll be compensated through a profit split is how that works. And then you get access to all this other great free stuff. You get my virtual trading floor, you get my training program, you get access to Scott Rudler's newsletter, Scott Rudler's virtual trading floor, which I think they call Alpha Team now. Why do we give all this stuff away for free? Why do I do all the training that I do for free? The reason is because I want the traders that I'm working with to be as successful as possible. I would rather give away something that's $2,000 if it means that it's going to make you a more successful trader and therefore you are going to be a trader with us for the next decade. So we're thinking big picture here, we're thinking long term. I see a question from Carl. Why would some people get 8x and others get 20x? You misinterpreted, I think, what I said. So you get 20x for day trading and 8x for overnight. That's typically what we would start. So again, you would get, if you put $50,000 into an account, you would have access to $1 million to day trade with, or 20x. But you would only have access to $400,000 or 8x to actually keep those positions overnight. So just for risk management purposes, we do typically keep the capital access, the leverage a little bit smaller, at least initially for overnight positions. So it basically covers it. We went over what's going on with the market right now. It's an interesting market. Definitely some anomalies occurring here that I don't think I've ever seen before in my entire career, just with what we're seeing from the massive amount of strength in the S&P and the NASDAQ versus some of these companies that are just in utter, gross, destructive bear markets. And it's going to be interesting to see how that plays out. I am still erring to the side of the longs. I think that it's more likely that those weak names are able to catch a little bit of a bid than it is at the S&P. The SPY completely rolls over and goes back down to $390 to $400. So that's how I'm positioning myself, but it's also timing. So we've been looking for this price correction that's finally come in over the course of these last couple of days to give us an opportunity to be able to enter some positions, to be able to buy a dip, and maybe that's what's occurring today. It wouldn't be even unhealthy for the market to dip a little bit further, but we're starting to get into that area, so we'll see if we can get a bounce. And again, here's my email address. So if anybody wants to speak to me about anything, trading, skiing, karate, charts, opening an account with T3, becoming part of my team, again, here's my email address. Reach out, and I'm going to get back to it. So have a great rest of your day, everybody. Stay disciplined, stay profitable.